What do you as a homeowner need to know about refinancing? Hey guys, my name's Andrew Augustiniak with the Augustiniak Lending Team. And today we are gonna talk not purchases, not assistance, not anything along those lines. We're gonna talk about you already own the home and you're like, when should I refinance? When should I not refinance? Because you might have bought in a higher interest rate environment. Well, the simple way to look at refinancing it is something that I take seriously, because what you need to know is out there are thousands of mortgage companies that are call centers that are in any given state, might be working out of their garage. But what they do is they hound you. Even when it's not the best time to refinance, they might be hounding you, buying your information. The servicer's gonna be emailing you. You might have a call center with an 18-year-old kid calling you like, hey, rates are low, it's time to refinance. But it may not be the right time to refinance for you. What I mean by that is that refinancing should be accomplishing a goal, right? And there should be parameters with that goal. If you don't achieve the parameter of that goal, then don't refinance, right? So here are my simple rules to refinancing, okay? Because again, if you bought, let's say when interest rates were in the mid sevens, there's a certain time, a strike time, that you should be watching for of when to refinance, because you don't want to pull the trigger too early, or else then you're just costing yourself money. But you also don't want to be the person who's waiting to try and save the maximum amount of dollars on your refinance, or else you might cause yourself try to save a few extra bucks, and then what if rates go back up and you can't refinance? So my simple rules to refinancing. Number one, if you are at least gonna save potentially $150 a month or 1% give or take on that mortgage. And the reason I have both options is because on different loan amounts, 1% or 0.5% may not make a difference. On a $700,000 loan, 0.625 to 0.75% could make a difference. Not to say you should refinance at that time, but those are the times when you should be thinking about refinancing, while also taking into consideration the overall market. Are we in a declining market? Are rates going down? Because right now, I could argue some people that are in I had people purchasing when rates were closer to the 8% range. I could argue that, hey, now with rates in the mid to low sixes, it might be a good time to refinance. But I also don't blame people for waiting still, because we're in a decreasing rate environment currently. So that's kind of my rule number one. My rule number two is, what other goal are you achieving? Are you getting your mortgage insurance off because your home has appreciated from when you initially bought it? Are you taking your term of your loan and maybe decreasing the interest rate along with the term? Are you going from a 30-year to a 15-year? Are you going from a 30-year to a 20-year? Taking those things into consideration. And then number three, thinking about pulling out cash to accomplish another goal. I don't like pulling out cash, and what I mean by that is equity. I don't like pulling out cash unless you're going to achieve another goal with it. Paying off debt, home improvements, other investments. So I don't like people pulling out their equity unless there's a goal associated with that money, something that money's going to go to. But with all those three tips with refinancing, at the end of the day, you also have to look at, what is my break even? Because there's always some type of cost to refinancing. You're going to have probably a little bit of lending fee. You might have some title fees. You might have some taxes, insurance, all those things. Taking into consideration, you're likely going to skip 1 to 2 mortgage payments and receive a refund from your current escrow account. So whatever that net cost is, with your savings, what's your break even, right? Is it 1 year? Is it 2 years? Because then you can make that argument of, hey, if I believe rates are going to go down, perfect. If my break even on the refinance cost, is 13 months, then it's a pretty safe bet to refinance, because after 13 months, you could refinance again and not be losing anything. So guys, it's important to know your specific situation is different than John, Corey, Steve, Nancy. Everybody's mortgage situation is different. We have to review your situation particular to your goals and your lifestyle and what you want out of your financial situation. Our team does loans in 45 states. So if you want us to review your financial situation and mortgages and based on your financial strategy, feel free to shoot us a DM. Feel free to text me. My cell phone number's in the chat. My name's Andrew Augustiniak, and I'm here to help.